The UK economy is projected to experience modest growth in 2025. Despite global uncertainties, several factors point to a positive trajectory. Consumer spending remains resilient, providing a solid foundation for growth. Business investment is also expected to contribute, albeit at a moderate pace. The government's supportive policies aim to foster a favorable environment for businesses and encourage investment. Economists forecast a 1.2% increase in the UK's gross domestic product for 2025. This projection, while modest, is a positive sign amidst a global economic landscape that has been fraught with uncertainties and challenges. The anticipated growth, though not groundbreaking, indicates a steady and resilient economic trajectory for the UK. This figure, while not indicative of a booming economy, suggests continued expansion. The construction sector, retail activities, and various business operations across the country are expected to contribute to this growth. The steady rise in consumer spending and investment in infrastructure projects are key components driving this modest increase. It's crucial to remember that GDP growth is influenced by various internal and external factors. Domestic policies, international trade relations, and currency exchange rates all play significant roles. The UK's ability to navigate post-Brexit trade agreements and maintain favorable economic partnerships will be pivotal in sustaining this growth. The projected growth rate reflects a balance between positive drivers and potential challenges. On one hand, technological advancements and innovation in various sectors present opportunities for economic expansion. On the other hand, potential challenges such as inflation, labor market fluctuations, and geopolitical tensions could impact the growth trajectory. The UK economy's performance in 2025 will depend on how these factors interact. The resilience of businesses, the adaptability of the workforce, and the effectiveness of government policies will all be crucial. As the country continues to navigate a complex economic environment, the projected growth, though modest, offers a glimpse of cautious optimism for the future. Consumer spending constitutes a significant portion of the UK economy. The projected growth in 2025 relies heavily on continued consumer confidence and spending. Factors like low unemployment rates and rising wages contribute to this confidence. When consumers feel secure in their financial situations, they tend to spend more, boosting economic activity. However, potential inflationary pressures could impact consumer spending power. Business investment plays a crucial role in driving economic growth. When businesses invest in new equipment, technology, and expansion, it creates jobs and stimulates economic activity. In 2025, business investment in the UK is expected to rise moderately. Factors like government incentives and a stable political environment can encourage businesses to invest. However, uncertainties surrounding global trade and potential regulatory changes could make some businesses hesitant. Section 5. Government policies supporting economic expansion. The UK government has implemented various policies to support economic growth. These include initiatives to boost infrastructure spending, reduce business taxes, and encourage innovation. By creating a favorable environment for businesses, the government aims to attract investment and stimulate economic activity. However, the effectiveness of these policies in achieving the desired outcomes remains to be seen. Section 6. Inflationary pressures, a potential headwind. Inflation poses a potential challenge to the UK's economic growth in 2025. The rising cost of goods and services can have far-reaching effects on various sectors of the economy. Rising energy prices and supply chain disruptions contribute to inflationary pressures. These factors are not only increasing the cost of living, but also affecting the profitability of businesses. When prices increase, it erodes consumer purchasing power and can dampen economic growth. Families find it harder to make ends meet, and discretionary spending often takes a hit. This reduction in consumer spending can lead to a slowdown in economic activity, affecting everything from retail sales to the housing market. The Bank of England faces the challenge of controlling inflation without stifling economic activity. Policymakers must carefully consider their actions, as raising interest rates to combat inflation can also slow down economic growth. Balancing these competing objectives will be crucial for maintaining stable and sustainable growth. The central bank's decisions will have significant implications for businesses, consumers, and the overall health of the economy. As we move forward, it will be essential to monitor these inflationary trends closely and adapt policies accordingly to ensure that the UK economy remains resilient in the face of these potential headwinds. Section 7. Trade uncertainty, navigating global challenges. The global trade landscape presents uncertainties for the UK economy. Ongoing trade tensions and the evolving relationship with the European Union create challenges for businesses engaged in international trade. Navigating these uncertainties and securing favorable trade agreements will be crucial for the UK's economic performance in 2025. The government's ability to adapt to changing global trade dynamics will play a significant role. Section 8. Productivity puzzle, unlocking growth potential. Productivity growth remains a challenge for the UK economy. Improving productivity, which refers to output per worker, is essential for achieving sustainable economic growth. Factors like skill shortages, underinvestment in research and development, and low business dynamism contribute to the productivity puzzle. Addressing these underlying issues will be crucial for unlocking the UK's long-term growth potential. Section 9. Conclusion. A balanced outlook for the UK economy. The UK economy is poised for modest growth in 2025. Factors like consumer spending, business investment, and supportive government policies contribute to this positive outlook. Consumer spending is expected to remain robust, driven by a relatively low unemployment rate and rising wages. This, in turn, will likely boost retail sales and the service sector, which are critical components of the UK economy. Business investment is also anticipated to pick up, as companies gain more confidence in the economic environment. The government's commitment to infrastructure projects and innovation will play a crucial role in this regard. Supportive government policies, including tax incentives and grants for businesses, are designed to stimulate economic activity and encourage investment in key sectors such as technology, green energy, and manufacturing. However, challenges like inflation, trade uncertainty, and the need to boost productivity remain. Inflation has been a persistent issue, driven by factors such as rising energy costs and supply chain disruptions. The government and the Bank of England will need to carefully manage monetary policy to keep inflation in check without stifling growth. Trade uncertainty, particularly in the post-Brexit era, continues to pose risks. The UK must navigate new trade agreements and relationships to ensure smooth and beneficial trade flows. The government's ability to address these challenges effectively will determine the long-term trajectory of the UK economy. Effective policy measures such as investing in education and skills training can help boost productivity. Additionally, fostering innovation and supporting small and medium-sized enterprises, SMEs, will be vital for sustainable growth. The government's role in creating a stable and predictable economic environment cannot be overstated. While uncertainties exist, the overall outlook for the UK economy in 2025 is one of cautious optimism. The resilience of the UK economy, combined with strategic government interventions and a focus on long-term growth, provides a balanced and hopeful perspective. As the nation navigates these complexities, the collaboration between the public and private sectors will be essential in achieving a prosperous and stable economic future.